Where are we going?
Away from what's behind us.
No! Fear the Walking Dead returns.
Where are we going?
Away from what's behind us.
No! Fear the Walking Dead returns.
Hey, good morning, everybody. Yeah, all right. Welcome to Trade Non Farm Payrolls Live, number 123. How's that look? Everybody got charts? Looks like we got the chat going. The link to the chat, if you're on YouTube, is to the top right. So how you doing? How's it going? How's your trading week? How's August treating you? Yeah. Another good month to be a currency trader. Looking very, very nice. Okay, well, without further ado, let me remind you that trading is risky, not appropriate for everyone. Scratch my back here. Your past performance, good or bad, is not necessarily indicative of future results. But please always stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. I'm wearing my Brazil T-shirt in honor of the Olympics today. How about you? Yeah. I meant to have that up while I said the disclaimer, so let's just pretend they overlapped. So where are you from? How about this? What Olympic team are you cheering for? How about that? Unless you're a socialist pig dog, and then everybody is equal and fair, and everyone at the Olympics is on the same team. Yeah. Well, yeah. So I can see. I do see your message. Yes. Yeah. I have. I guess the luck or the great honor to cheer for Canada, the United States, and Australia. But in a few hours, I will be in South Africa, and so I imagine I always have to cheer for the home team. So it's going to be a really interesting year, or very interesting Olympics for me. Indonesia! Right on. And apparently, I've never watched fencing, Olympic fencing. I don't think they put it on TV in America because they're not basically guaranteed to win a gold medal, so you can't put it on TV. But the world's greatest fencer is from my school, Harvard, amongst some other athletes. So I'll have to do the whole Go Harvard thing, too. By the way, my name is Wayne McDonell. I'm the Chief FX Market Strategist for Traders Way. We're an ECN, if you want us to be. We're a variable spread broker, if you want us to be. We can be a fixed spread, which is really great if you're scalping, if you want us to be. So it's your way at Trader's Way with Trader Wayne. Yeah, you like to trade Forex? We're a broker. Boom! Partnership made in heaven. So swing on by tradersway.com after the webinar today and give us a test. Try out our execution speed. It's fast. Check out our fees and costs and all that. Very fair. And I do training events in a live room for clients of Trader's Way. We do that Monday through Thursday, 7:30 in the morning. And then every Friday at 7:30 in the morning, New York time, I'm here at FX Street. Today's a non-farm payrolls event. We will have about 600 people. That's very nice. It's open and free to everybody. But all the other Fridays are for premium members. And it's a whopping €1 a day, I think, to have access to me and 10 or 11 or 12 other fabulous Forex experts. So I'm shocked. If you're not a premium member, I'm shocked. It can't be because €1 is too much, right? So I hope to see you at the premium events. Oh, and by the way, because of your loyalty, and I hope I've earned it over the course of the last 123 non-farm payrolls, 123 months. 123 months I've been doing this. But because I've had the opportunity to earn your loyalty, I'm also Forex Speaker of the Year here at FX Street. So thank you to everyone at FX Street. Thank you. All right. So we'll get to all of that in a second. So what I propose we do today. Highway. Hang on. The chat's not quite showing up properly for me. Hang on. There we go. If I put it on two screens, how about that? I remember, it says, "Hi Wayne, I remember you told me about the Swedish King story." Yeah, it was very fun. Yeah, I had a good time in a palace in Sweden with the royal family. Yeah, it's true. I can't remember if that's the only king I've ever hung out with. I can't remember. It was a Tuesday. It was the greatest day of my life. Yeah, but let me tell you, Stockholm, what a beautiful town. And it was on the most beautiful day to ever be. All right, so here's what I propose we do today. I take you through my chart setup. So if you're new, then you know how to read the charts and stuff like that. And then at 8:30 we got the news, obviously, so I need to teach you how we're going to scalp the market. And then we'll have plenty of opportunity to discuss other things as well. Technical analysis, fundamental analysis, that kind of thing. And I kind of have a standing rule, and that is you are the boss, and I am a simple, humble currency trader. So you dictate the agenda today based on what your needs are. Is that a fair relationship between you and me? So imagine I've been doing non-farm payrolls live now for 123 months. That's just this one webinar. So I've been around and I've had the opportunity to learn a lot of good things. I've lived through a lot of bad things, and if I openly share, then perhaps you'll have an opportunity to learn. So I beg of you to interact with me today and ask questions. And if so, I think we'll have a good collaborative day. What do you think? And just a quick poll to see how many people have attended. Well, how about this? Let me just ask a different question. How many non-farm payrolls events have you attended with me? How many non-farm payrolls have you attended with me over the years? Is it your first? Is it your 100th? Where are we? It just helps me understand your grasp of my methodology and even my language. Fourth, second, sixth, first, 10th, about 10, 20 perhaps, second, first, 75, maybe 20, 10, 3 times, first time, this is my first time, wow, holy smokes, lots of firsts. Too many to remember. 75. Wow. Thank you very much. 123. No joke. Let's see. Who is that? The chat closes the name, so I can't see who it is. Joe, I guess it says. Right on, man. Holy smokes. 123. So, a lot of first-timers and newbies, right? Cool. Well, first of all, thank you for being here. Second of all, I want to make sure that this comes across. I want you to interact. I want you to ask questions. I want you to be involved. This is about interaction and proaction, what I call participaction. And even though you might be here just to see me scalp the news, which, you know, we'll have an opportunity to do, my overriding goal over all 123 events, like I remember actually over 10 years ago sitting down with FX Street and discussing the whole point of the event. And I said, look, if I'm going to do something, I want it to make a difference. And I want it to be different and unique. Now, this is so far long ago that webinars didn't even exist yet. Believe it or not, I am one of the first traders in the world that I know of, and I've been around forever, to use a webinar to show you live charts. They were designed to broadcast PowerPoint presentations. And I said, you know what? I just want to show people what I'm doing. Let's just trade the craziest, most ridiculous time of the month to trade. And I chose Non Farm Payrolls because the volume and volatility is high, but also there were a lot of scumbags and scam artists out there promoting stuff during Non Farm Payrolls as promoting it as a way for amateur traders to get rich quick. And I said, well, that's just full of nonsense. So why don't I do Non Farm Payrolls? Because I know I want to make a difference. I know I will teach. I know I'll just take the shirt off my back if it'll help. But at the same time, if a new trader is with me, they're not with some scumbag trying to sell them something. So I'm saving your Forex soul, baby. That's why we're here. That's the whole point. So the more you interact with me, the more I have an opportunity to teach. So this isn't just me showing you what I do. It's me showing you what I do and answering your questions and guiding and all that kind of stuff. Okay? So again, let's make this collaborative, okay? Cool. Well, then I'm glad I have these charts because this is important. Oh, question from the YouTubers. What do I expect from Aussie Dollar? You guys are so funny. Look, all right. All right, fine. I guess let's start with that. How do I approach this? Let me first explain to you how I interpret technical analysis. Let me then have an opportunity to discuss fundamental analysis. And then third, we can go through the charts. But like what do I think of Aussie dollar right now? What I think shouldn't matter that much. Because I can think one thing and I can do another thing. But also what's important now on the Aussie dollar may not be important an hour from now. So on and so forth. And this does bring up another thought. Since there are so many people here that are relatively new to my events, you may not have read the FX Street report that I wrote about a year ago on how to predict the headline non-farm payrolls number and how to trade it. Would that be fair to assume? Okay, so let me get you a link for that. So I don't know how easy it is to find this on the new version of FX Street. I don't see any likes anymore. This page used to have something like 400 likes. Now there's none. So let me get this to you. Okay, so I've already documented and shared with you and the world how to trade, but more importantly, how to model non-farm payrolls. So, for example, if you're asking me a question like, "Hey, Wayne, what do you think the NFP number will be?" Okay, well, look, I can make up a number, right? I could just make one up like most experts do, right? But in that article, I actually tell you how to look at ISM services, ISM manufacturing, the trend in weekly jobless claims, the trend in non-farm payrolls itself, and the use of the Challenger Christmas and Gray report. And when you combine all those things together, you can create a model that should get you a pretty accurate number on what non-farm payrolls may be. But now we are comparing apples and oranges a bit because that's not how the government does it. It's a completely different methodology. The government basically goes door to door or telephone to telephone, and they create two reports. There isn't actually a non-farm payrolls report. There isn't actually. There's an employment situation report, and then, right? And within that employment situation report, you have the establishment survey, and you have the household survey. So one part of the employment situation report is someone going door to door to door, knocking on the door, and their surveys are something like this: do people here have a job? One says, "Yeah, I have a job." And the other person says, "Yeah, in fact, I got 3 jobs because the work that's out there is pathetic and it doesn't even pay enough to cover my expenses. So I have to have 3 jobs." The government says, "So you are working then?" They don't care whether it's 1 job or 15 jobs, right? They're like, "Oh, so you're employed then?" "Yeah, I have 3 jobs." "Okay, good." And then they leave. And they don't mark down 3. They just say, "Okay, working, got a job, next." The establishment survey, however, is where they go to businesses and they look at the payrolls, the actual payroll stub that the employer, is paying their employees with. And that's where, if you had 3 jobs, you would be counted 3 times because you'd come up on 3 different paychecks. Or 3 different companies' payroll books, right? But here's an interesting thing. I've read about the history of economic indicators in the United States, and it's only a recent thing that the government would even know. Like, why would the government even care if you're working? What is it their business for? Who put them in charge? Like, so you don't have a job. So what? Why should the government care? Is it the government's responsibility to give two hoots about you? What are they supposed to do? Like, give you money because you don't have a job? Well, that's a new concept, guys. That's a new concept for the government to even care, to even track it. What's the point of tracking it? That's a business issue. That's not a government issue. Okay? So all these things like GDP, gross domestic product, unemployment, and, you know, stuff like that. Now, inflation has always been an issue, and that's interesting, right? And the government wants to know how much to tax. That's also an interesting concept. But, like, whether you have a job or not, that's new. That started, I think, about 1920. And even then, only really got put to use around the Depression in the 1930s. Isn't that interesting? So I posted this link, right? You got it? Oh my God, there's Pegler. Look at that. How great. One of the other experts. There we go. There's Pegler. He's like my baby boy. Love Pegler. See, man, €1 a day should be worth just me and Pegler alone. I'm telling you. All right, so become a premium member at FX Street, huh? So what that link is how to... Oh, where did it go? Come on now. Okay, we're back. All right. So what this report tells you is how to do the fundamental analysis. Again, average NFP number, average jobless claim, ISM data, ADP data, challenger data. And that's how you create a model to project what the headline non-farm payrolls is. So if you know, this is what will tell you, like, if the experts expect 180,000 jobs this month, how do they come up with that number? Well, and you know, I teach you how to come up with the numbers so you don't even have to rely on anybody anymore. So you wouldn't have to ask me something so silly like, Wayne, what do you think non-farm payrolls is going to be? It's an amateur question. It's like, really? And why would you care about what I thought? What's more interesting is you should be able to very quickly do the numbers, or more importantly, you're just in tune, like you know what the trend in jobless claims is. You just already know. You were there when ISM came out, and by the way, not only were you there when ISM services came out, you already looked at the subcomponent data. And for example, you actually downloaded the report and looked at it. You see what I mean? So when you say, hey, Wayne, what's the headline going to be for NFP? You just told me that you don't know what the ISM services employment subcomponent is, and by doing that, you told me you actually haven't downloaded the report, nor are you in tune to the trend in those of what it was in the past and where we're likely to go into the future and why. And then I say, well, holy smokes, dude, we got a lot of work. So you should never ask somebody like, hey, you know, what's the headline number going to be? Like, why would you care? I could be a buffoon. I could be a moron. I could be on crazy medication. I could just be totally wrong. I could throw out a number. I could try to trick you. You know, I mean, so it's more like, say, you know, ask me about a trend in the or something. I don't know. So I can make up a number. More importantly, I'd rather teach you how to come up with your own number, because then you're smart money, right? There's a scene in one of the Market Wizards, the original Market Wizards. There's where they're talking to Paul Tudor Jones, and Paul Tudor Jones at the time was doing a lot of oil trades. And he could just move the market. Now, he could move the market for 2 hours, but it always comes back, right? But, you know, he always mocked people that came up to him and asked him what his, what he was doing and what his trade was. Hey, are you buying oil? Are you bullish on oil? And he always laughed. He's like, yeah, I'm bullish on oil, but not 2 hours from now. Like he's already coming up with the next plan and the next trade, and they're so concerned with what he's doing now. He's like, what I'm doing now is irrelevant. Because if I'm buying oil, by the time you buy it, I'm going to sell it to you and I'm done. And you provided me with a liquidity event. Right? And he's like, I don't even get why they asked me the question. Why is what I'm doing now relevant? What I'm doing now is relevant 3 hours ago before I did it. It's like it's the wrong question. Right? It's more like, hey, Paul Tudor Jones, what are you going to do in the oil market tomorrow? Oh, wow, that's a good question. So anyways, so this report goes through not only how to come up with a model, right, to model the NFP number, but also 2 different ways to trade it. The swing strategy and the scalping strategy. And then I give you some tips and advice. Not a bad article. Like I said, it used to have about 400 likes. I don't see really a way to like on the new site, so you'll have to trust me that it's reasonable. So again, I'll pop it here in the main chat, and then I can't post it in the YouTube chat. So if you're on YouTube, there's a couple hundred people on YouTube. Hey, YouTube! Click on the link, and so you get to the actual chat. It just works better. Okay, so anyways, there's that. So I know it probably feels like I asked you to interact, and then you asked a question, and I hit you over the head with a hammer. But it's a love hammer. Okay? So I appreciate it if it does feel like I just hit you over the head. But the point is, I want you to be smart money. I want to make you smart money. And, those are amateur questions. I'd more like to interact with you and say, what do you think about this and what do you think about that? Like, where is the Aussie dollar going to go? Well, how would I know that? It's kind of a silly question. Where's it going to go? Well, how would I know that? Right? How would I know? I can tell you that we're at a weekly reversal pivot point. Right? And on the daily chart, the oscillator is on the high side and we're going into a double top. I can tell you that, but where's it going to go? Well, how the hell would I know? Are you a bull or a bear? If you're a bear, you're looking at a double top on the daily, and if we have a high NFP number, that might impact the way that the market interprets the Fed's next action. It might put September slightly on the table. Therefore, the dollar would probably strengthen. And if you were a bear on the Aussie dollar, selling at a weekly reversal pivot point on a daily double top with, fundamentally created U.S. dollar strength, probably a great opportunity to sell. Yeah. But like, where's it going to, I don't know where's it going to go. I don't know. But if I was a bear, I'd be preparing to sell. Because I have the resistance. You see what I mean? Now I just need the NFP to be dollar bullish. So, right? So, again, if I do hit you over the head with a hammer, it's not because I'm mad or I'm an arrogant SOB. It's because I'm trying to change the way that you think. Because for me to help you become a success, I think I need to change your behavior. You see what I mean? Change the way that you look and act and even think about the markets, and in particular how to trade it. Okay? So you see where I'm coming from? I hope you appreciate the bluntness, because I only have 3 hours. I don't have enough time. Okay? All right. So, yeah. Oh, methodology. Let's just make sure we're on the same page there. Where did my charts go? La ba 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 da do ba da do ba 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 bum bum ba dum bum ba dum bum. Go da 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 baby. Da 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 da. Okay. By the way, is the scrolling welcome to Non Farm Payrolls? Is that annoying? Let me know if it's annoying. I'll turn that off. All right, so just make sure that you're following the same technical analysis as moi. I look at the market, and the first question I ask is, what is the market doing? A similar question is if somebody asked me, bumped into me at a street or at a party or something like, hey, so how are the markets? Well, I could say, well, you know, it was down on the 4-hour, but up on the 1-hour, moving sideways on the 15. So then I was buying and selling and buying and selling, scalp, swing, spot, trade, boom, boom, boom. Monthly, weekly, daily, 4-hour pivots. And they're like, I don't know what you just said, dude. Well, I'm long-term long, but I'm short-term short. Dude, I still have no idea how the markets are doing. How are the markets doing? So in this case, it's a very broad question. And early on in my career, I was fascinated by charts. See, my first Forex account didn't come with charts. Currency traders did not use charts. I'm not old. I don't even have a dang fangled computer. Yeah. I actually met a currency trader, and I asked her, I think her family was from Iran, and I asked her, well, how long have you been trading currencies? And she's like, for as long as I know, like for generations, we've been currency traders. I'm like, oh, that's amazing. What kind of trading do you do? She's like, we make one trade a year. I'm like, even I can do that job. What? Right? Dumbass said what? Yeah, holy smokes, eh? Yeah, like, yeah, we make one trade, and the family lives off of that. Right? Well, I could stop dancing at the clubs if I could do that. So, anyways, it's a broad question. What are the markets doing? Are the markets bullish or bearish, right? And so I started using moving averages to answer that basic question. Like, what is the market doing? Now, is the market the trend? No, because I realize, let's say the trend, if you're looking at it over the course of years, the trend could be one thing, but what's happening now in that trend could be different, right? So it's not trend. It's more like the broad market of what's kind of happening today-ish or this week-ish, right? It's kind of what's the general theme, which may or may not be the same as a longer-term trend. Okay? Because, you know, think of the summer lull of the low volume and volatility could change the market conditions, but the trend could still be the same on the long term. So anyway, so I used the 2155 to discern just what the market is doing. So I did that for a while, you know, 6 months or something, and I realized something very unique. Price, or let's say the market, could be falling, but quite a bit of the time price is going up. But I had to ask myself, well, what is price? Like like on the short term, like the actual prices are going up and down, even though the market is bearish. A lot of the time, I see green candles. You see what I mean? So there must be something else going on here besides the market. So I called that price. And I used the 5/8 to represent the 5/8, you know, the EMA SMA combination, just to say, what is price doing right now in the moment? In the moment, as they say in Paris. me. Okay, market, price. Okay, and then the long-term trend. And then volume and volatility can be measured with Bollinger Bands. Okay. What's the best pair to trade today? Well, I would suggest anything with $1 on it. Okay? And then I would suggest you do Plan A and Plan B. Plan A, Non Farm Payrolls comes out ripper awesome, and the US dollar strengthens. What are you going to sell versus the US dollar? Or second, Non Farm Payrolls comes out very disappointing, and the US dollar weakens. What is it that you're going to buy against the dollar? And you should write that down now. Okay. An example is dollar's weak, so maybe you buy Aussie dollar, buy Kiwi dollar. NFP is ripper awesome. You sell euro dollar, you sell pound dollar, for example. I don't know if that's right, but that's an example of what you could do. Is that, you got that, Alexander? Okay. That very often I can tell you exactly based on average ranges post NFP, but I don't have that data on me today. Hang on, I think this thing keeps changing. Okay, all right, so one thing that we can discuss further, if you ask me, of course, is how I use the MACD and stochastics. The MACD I slow down, and it represents overbought and oversold conditions for market forces. Stochastics I speed up, and I use that to measure overbought and oversold conditions for price. So once again, I'm using price action and differentiating it from market forces. Genius, genius, genius. Right? Extreme close up! Oh! All right, so that's what a chart will look like. But the interesting thing about that is I look at multiple charts at once. Like, let's do pound dollar here. No, let's do USD yen. So I'll take that. Actually, that's a terrible example. I don't have my typical chart set up here. All right, let's do a different one. Let's do pig dog. Okay, there's a very typical setup here. So I take that idea that I just explained. That's how I look at a chart. And you may say there's a million lines here, but I'm looking at the market first. Then I look at price action. Where are we? And then I might glance at trend. It's very quick. I can look at the Bollinger Bands to tell me volume and volatility. I can say, all right, well, no one's trading at the moment. And then I'll look at the oscillators. Where are we in the cycle? How close to the waterline are we on the MACD? Are we overbought or oversold on the Stokes? Okay, and then, so I break it down into pieces. I don't look at it and see lots of lines, honestly. Okay, but I take that, and then I apply that to multiple time frames. So this is usually a 15, this is usually a 5, that's usually an hour, and this is usually like a 4-hour daily. The other thing that I add is pivot points. Okay, weekly, daily, weekly, monthly are what are important to me. Okay, but that's just because I like to have leading indicators. So now you might say, Wayne, you have a million lines. I'm like, no, because I only look at things that I want to look at. Okay, so my mind filters it out very quickly. All right, so let's go through the NFP scalp. Boop, 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 ba-da-do-do-do-do-do-do. Okay. NFP comes out, boom, and the market moves. Do we trade? No. Why should we not pull the trigger as soon as the news comes out? One reason is your spreads may change and get very large. I don't know the type of setup you have. At Trader's Way, if you were a scalper, let's say, and you wanted a fixed spread so that you always know what it is, you could start an account and say, fix my spread, so that it never changes. So if it's 2 pips, you know it's always 2 pips, and that could be important to you right after non-farm payrolls because you know it's not going to go to 20 pips like some brokers. Or like the interbank market, right? Another one is volatility, where the volume and volatility spikes or drops, whatever the case may be, and your broker just can't really execute it very quickly because there's too much market or not enough market, and you can either way you can get things like slippage, or you could just have a bad broker and they're just really slow at execution. So like I've tested Trader's Way through an independent source, and ours is good, which didn't shock me. But I was shocked at how other brokers were very slow. And you can see that they're slow. They're fast to put your trade in, but they're slow to take your trade out. And I'm like, that's probably by design. Because they probably pick up an extra pip on the way out. Right? So you might go with a broker that says, oh, our spreads are the most narrow. We have the smallest spreads in the world. We're the cheapest broker ever. Right? We're practically non-profit. We're doing it because we love you and care for you, right? And then you take a trade out and they slip you a half of a pip or a full pip. This slips in their favor. So now their super, super, super cheap spread actually costs you more than going with a legitimate broker. They're just stealing it from you. That's all. Right? So, yeah, whatever. So our execution's fast in and out. So after non-farm payrolls, though, you know, let's say the server slows down. Or let's say the interbank market freezes up. It might be a long time to get your trade in, like, you know, a half of a second, in or out. And what can happen, let's say, in the course of 1 or 2 seconds execution time in you know, extreme situations? What that could be 10 or 15 pips, right? And if their spread jumped to 20 pips, all of a sudden you've just lost 40 pips in about 6 seconds, right? Because your spread jacked up and you're trying, let's say your stop is executed and they're trying to get you out of a stop and it takes 2 seconds because of non-farm payrolls or whatever, and all of a sudden you just got yourself a negative 50 and almost nothing happened in the market. So that's why I say, you know what, if you just wait, I don't know, 4 or 5 minutes, the vast majority of that volatility will wane, and therefore your risk will normalize. You see? I'm asking you to not take more risk. I'm asking you to behave in ways that you are taking on less risk. So NFP in this case opens up, and what you say to yourself is, wait. The other thing that you can say is the market opened bullish. Great, fine, great. The market reacted bullish. Great. Okay? So using like price action theory, what I'm going to do is I'm going to look at the old resistance and bring it across and hope that that's going to be future support. And why would I want to do that? Because I want to buy. What made me want to buy? I don't know. The market seemed to interpret the NFP number as being bullish for this currency pair. And by the way, these are 1-minute charts. So this is a scalp. There's no time for group hugs and committee meetings. You're either going to do it or you're not going to do it. And if you're not sure, don't do it. Okay? So again, if the market reacts bullish, I want to be bullish too. Then I need to wait for the pullback. And the most ideal area is somewhere between the 382 and 618 Fibonacci retracement, or using the old resistance becomes support model. And somewhere in there you should go bullish. In this example, it did a 786, but then it held, then the next candle held, then the next candle held, then the next candle held. Somewhere in there, if you're a scalper, you're long. Why? Because you already knew somewhere in here you wanted to buy. So it went down a little bit more, and then it held. Well, if you had your finger on the trigger, somewhere in here you need to be long. If you're not capable of doing it, you're not a scalper, and don't be ashamed. Just set up set up a swing trade. Don't worry about it, but just don't get involved with this stuff. Okay, so now we're talking about 1, 2, 3, 4, 5, 6, 7, or 8 minutes after non-farm payrolls. And by then, the volume and volatility should be pretty normal. And your risk should be a lot lower. You see what I mean? Well, I see a couple of chats going on about hands full of rands. Yeah, on Monday, I'm doing a full day speaking in South Africa. I'm rolling up my sleeves and teaching people how to trade. So if you're going to be in Johannesburg, it'd be nice to see you. Although I thought we were fully booked. I think we got a couple of hundred people in the room anyway. So, but I'm doing a second day now. So I don't know. Handsfulofrands.com will answer those questions. Should be fun. So anyways, if things go right, you know, I would say, so if you longed in here, you know, 1, 2, 3, 4, 5, 6 minutes later, you should be profitable. If 6 minutes goes by and you're not profitable, it's probably not going to work out for you. You're probably going to lose. So how long are you going to hang on to it then? Oh, but maybe, but wait, maybe, dude, no, it's not going to work out. It's a high volatility, event-driven strategy. If you buy it down here, and 3 minutes later you're down here and you're thinking, but wait, it might bounce up. No, 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 no. If you buy it down here and it's made 100% retracement and gone lower, so, and this does happen, that NFP opens up and then heads straight down, making lower lows. No, 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 no. Your scalp has failed. Okay, your scalp has failed. I mean, what are you doing? What you got, right? So keep your stop close, and if you're not profitable in 6 minutes, you should probably bail, my friend. And don't worry about it. If it does end up going up later, well, don't worry about it. It was a scalp. And if you can't afford to lose 25 pips, you're over leveraged. And lastly, if you lose more than 25 pips, you're not paying attention to what this strategy is. You're not trading what I'm teaching. And therefore, then you're like a sick Eskimo where their family has dragged them out to the edge of the ice, threw them on, and threw them into the water. And you're out there on your own, man, just you and the polar bears. Okay? So if you lose more than 25 pips on this, you're not, how could you if it's a scalp? I mean, right? You, most of the time, you should be profitable within 6 minutes. And if you're not, go ahead and take the 9 pip loss, dude. Okay? Grow up. Boom. And if it works out, this will take off, right? Why do you move your stop to break even, let's say, in 5 or 6 minutes? Because when you get to what I call the line in the sand, let's say here, so let me go back one candle or one chart here. Come on, go back chart. Man, my mouse is crazy today. No. All right. So, if we find ourselves in this situation, right, it hits the line in the sand and then drops, you're knocked out at break even. Boo-hoo. Okay? That's why we do it. There's no hope, right? If this doesn't take off like a rocket ship, then something unusual is happening in the market. We're not getting the volatility or the volume, and this trade has failed, so move on to the next trade. Okay? The next technique, right? The next technique is to take a look at longer-term support and resistance, and use them as counter trades. Okay, I'm using the eyeballing technique here. Okay, so going into like a 15-minute chart now. Let's say non-farm payrolls, okay, comes out and it's horribly bad, and even the pathetic British pound, and I should probably mark this one too. Okay, if the British pound in that case takes off, pig dog spikes, comes back, and then we find ourselves up here, let's say a half an hour or 45 minutes after non-farm payrolls, and we're way up here, the counter trend trade now, let me change the color, will be to sell it from the top. Okay? Or if, like I showed you before, if we were way down here, that's the only bottom I have. If there's no bottom here, it's way down, right? We'll have to look at weekly pivots. But if a half an hour, 45 minutes after non-farm payrolls, you're down here, a counter trender is probably going to look over here for an up. And it's not, it's just a counter trend. It's like a mean reversion. So like if we move the full average daily range all the way down to daily S3, there's going to be some profit taking, and we go back to the mean. That's all. That's all it is. You know, that's all it is. Okay. Any questions? Going into non-farm payrolls? I can tell you that we will use TradeTheNews.com to get the news instantly through their audio service. Thank you, TradeTheNews.com. Okay, no questions? Everybody good? So let's talk about the fundamentals of it then. The sentiment in the market has to do with whether the Fed's going to raise interest rates in September or December or not at all. The sooner the Fed raises interest rates, or the sooner the market feels the Fed will probably raise interest rates, the stronger the dollar should get. I've been asked for the first time in 123 non-farm payrolls whether I need a break. A what? I don't take holidays. But I will have to go pee-pee sometime. Probably after non-farm payrolls, but before the stock market opens. Amazing. Who takes... breaks are for closers. So anyways, yeah. So if the number comes out good, and we'll consider anything over 200 as good, right? There will be some in the market that feel the Fed is probably going to raise interest rates in September. By the way, when's the first hint going to come? The first hint is going to come not during non-farm payrolls, because there's a couple of non-farm payrolls before the next meeting. It's the Jackson Hole meeting. So pay attention to the Jackson Hole meeting. Yellen is probably going to hint, and that will move the market. Okay? Okay? So if it's greater than 200, there are some in the market that are going to believe that the Fed will have to raise interest rates. And if they do, the dollar will probably strengthen based on people front-running that move. Okay? So, you know, in that case, maybe this spikes up, and then boom, we get a move like that. Okay? However, if it's 150 or less, let's say it comes out 122, that's below the mean, and below average is not good. And people will say, all right, they can't do it in September, maybe December. And what'll happen is anyone that's already long the dollar will likely want to get out, because they're going to think, you know what, this is going to go up. Or they're not going to raise till December, so they're basically going to be they're on the wrong side of the trade for the next 6 months. So they won't buy the euro, but the euro dollar will go up. They won't buy the pound, but the pound will probably go up versus the dollar, and that's just people getting out of the dollar long. Okay, so you probably get something like this, like I showed you. And then you'll probably look at that or the counter trend trade. So if the number comes out 90,000, this will spike, you get the pullback, you scalp it long like I taught you just a few minutes ago, so you're long in here, and then what? And then you'll probably look to counter swing this back till the end of the day. Everybody got it? Everybody good? Everybody excited? I'm really happy to have you here. And did you know you and I can hang out every day? If you open up an account at tradersway.com, I'll invite you to a strategy session every day. Isn't that nice? So I hope you become a client, even a demo account. Less than 30 seconds, honestly, to open up a demo account. So it'll be a real honor and a pleasure to serve you every day for the whopping price of free. Or the more advanced stuff, we often talk about things like portfolio management and that kind of stuff at the FX Street Premium events that I do every Friday that's not a non-farm payroll Friday. So I hope to see you in the premium.
180,000. Unemployment expected 4.8%.
This is a 24-hour live broadcast test channel from the Trade the News Broadcast Network.
The data in just a few seconds. .9% unemployment, 255,000 for payrolls, 255,000.
Oh my God, 255!
And unemployment remaining at 4.9%.
Say what?
Payrolls 217,000.
Oh no, you
170
didn't.
expectation from the back month revised a little lower.
Wow, 255.
3%
Holy
is 1/10
smokes!
expected year over year. 2.6%.
That's dollar positive.
Expectation weekly hours at 34.5 is 1/10 higher than expected.
Unemployment did not change, though.
Labor force participation at 62.8%, up 1/10 from the prior month. In Canada, 6.9% unemployment is in line with expectation. For the trade balances, U.S. minus 44.5 billion versus the minus 43 billion expectation, prior by slightly narrower to minus 41 billion. Canada trade balance at minus 3.63 billion, wider than the minus 2.84 billion expectation. The back month rised wider.
We're seeing the dollar index firm, following the better.
Very, very. All right, so beautiful stuff. I'm a bit shocked, though.
Headline modestly lower, the 10-year down about 1/4 of a point. We backed up about 4 basis points.
I'm surprised there's that many people looking for work.
December Fed Fund future off just about 1.5 ticks. U.S. equity futures are at just coming off of the highs, up 6 handles now in the S&P Minis, 2165.
Watch the 31. Watch the 31.
Gold futures are under some pressure, down close to 1% at 1355, following the stronger than expected portions of the labor market report. Silver also making a new low, down 2%.
Yeah, watch the 31. Wow. All right. So, yeah, unemployment rate 4.9. Headline 255. Wow. Check this out. Last non-farm payrolls was ridiculous, right? 287. They jacked that up from 287 to 292. The revised NFP is 292. Oh my God! It's ridiculous. That's a little bullish. Wowzers.
The dollar CAD now up 115 pips, 131.29 in the disparity in the both Canadian and U.S. jobs report, pushing the dollar CAD higher. Again, the U.S. jobs report was relatively pretty strong across the board with the unemployment rate. The only spot to tick up higher than expected, but we did see a drop or an increase in the labor market participation rate. We also saw average weekly hours and wages rate rise on top of the better than expected payroll figures and back month revisions higher.
Hang on, I have to. I'm checking my positions. Wow, that's smoking hot, man. That was great. Huh, yeah. Yeah, we got peso in the middle there for some reason. You know, the beginning of the month stuff, right? What are we looking at? USD yen. All right, let's get off the peso. I'm assuming you got the peso trade. All right, so one of the things we had talked about yesterday's got nothing for me. If you're a client of tradersway.com, we talked about the potential for a longer-term double bottom that could form.
European bourse is catching a bid as well. 10,307 now in the DAX at session highs, up more than 0.75%. The Euro stock's up roughly 0.75% as well.
Okay, so maybe that's coming together. Let's take a look around the world. Bum 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 ba da 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 da. Ba 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 da ba ba da da ba. Gold coming down, dollar going up. That's good. There's our big bounce on oil. As you can see, we have a nice little setup here. Again, this is something we talked about, probably Tuesday? Was it Tuesday? I made a big stink about it's 40. Of course it's going to go up. It's 40. So again, if you were inclined to Trader's Way, that's something that we were talking about on Monday or Tuesday. This idea of like, of course it's going to go up. It's 40. It doesn't make any logical sense or an intelligent sense. It's not based on any fundamentals. It's just $40. And that's that. Okay? In similar ways, if I go out to a 4-hour, in similar ways that it fell because it went up to 50. So we knew at 50 it was going to fall.
Extension now.
We don't know how it's going to fall.
110.81,
but eventually
in the euro. Cable also
it fell.
A fresh low 130.72, and the dollar yen above.
We're in the place where it should go long.
U.S. Treasury prices continue to trade.
Why? Because it's psychological.
Post-jobs report low. The 10-year.
That's it. It's psychological. It makes a computer wouldn't care, but humans are not computers. They're not rational. Right? I disagree with the Black-Scholes model generally. All right. So, anyways, there you go. The next logical area is more like 37 or 36. Okay. Okay, we're going through weekly and monthly pivots on the pig dog. So let me go back to that. Was it or okay. I'm pretty sure you heard me yell, watch the 31. Well, okay. Here's another question that I believe is framed incorrectly. Hello, would it reverse or the dollar is going to be bullish for a while? Well, how would I know that? You're asking me how long is the dollar going to be bullish? I don't know. How are you going to trade is a different, a whole different question. All right. What are you going to do? Are you a bull or a bear? Do you believe the Fed's going to raise interest rates in September? Okay. If you think the Fed's going to raise interest rates in September, then this is going to be bullish until we learn more about that. Okay? Another better question is, do you think the news is big enough for us to get through this level of support? And if so, where's the next level of support? Well, luckily I already have it, right? I already have it written here. Okay, so the beast would be able, or not the beast, the pig dog should be able to get through the psychological level of 130. Now we've tested it before, and we hesitated over here based on the psych level of 129, 130, and a good non-farm payrolls adds two elements. On the left, the UK is cutting interest rates, their economy is in shambles, and they need to pay the piper on the Brexit thing. Okay, that's fine. That's already in the model here. But now the Fed's going to raise interest rates sooner than later. Is it September? I don't know, but September might be on the table. It may be September, and you're going to hear the talking heads like these guys above me. Blah, 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 blah. The market's going to think dollar bull for a while, probably until Jackson Hole, right? And then we'll learn more from Janet on that. Grandma Yellen. But putting those two things together, should we be able to break the current low at 128 and some change? Well, over here we had the UK being weak. Has that changed? Well, recently they've cut interest rates. So theoretically, all else being equal, we should be lower than this, just based on the pound. Now, what else has changed with the dollar? Now the dollar may be in a situation in which the central bank will have to raise interest rates, the opposite of the UK. And in which case you would assume we should get lower than this. Putting those two things together, if the if the pound suggests we should be lower than the low on the left, and the dollar suggests we should be lower than the lower on the left, then maybe we're on our way down to 125. Let's throw down some more information here. Let's do the time will begin. All right, this one. Let's do this one. I hope you appreciate my focus on trade plans versus just stupid opinion. I know it's frustrating at first if this is one of your newer webinars with me, but I'm not suggesting you be bullish or bearish. I'm suggesting you put a plan together and you focus on what the analysis tells you. So based on this now, let's go into the 4 hour again. Let me reset this. In that case, if you believe all that to be true, then the trade plan may be something like this. And sometime next week or the week after, we get down to about 125. Somewhere between 127 and 125. So somewhere between 400 or 500 pips from where we are. Sorry, 500 or 600 pips from where we are. Okay? Right. Oh, so you got a profit on that? Successful profit here, Wayne. Thank you very much. Your teaching is superb. I'm sure the Swedish king found you a very interesting character. I said, wow, you have a pretty daughter. She can be my queen, if you know what I mean. But I was young. I was young way back then. I didn't get to dance with the princess, but on that trip I did get to dance with a Russian ballerina. And I'm like, this doesn't happen every day. Okay. Everybody having an all right time or better? Anybody having a good time? We're getting a little of the bouncy bounce. Just get ready. Get ready, because this ain't funny. My name's WMD, and I'm about to make money. Pulled out my dollar, waved it in the sky. I said, this sucker's going up. Made the pound fly. So Fred, I had set that up yesterday and the day before as a potential double bottom, and if the non-farm payrolls was going to be good, then it could be a floor. And so 101 could be the bottom of the summer. But that's what I said yesterday. Here it comes. Yeah, like you, if you want to go back to the dollar yen, I mean, look, come on, guys. Look at the dollar yen. Look at the 4 hour. There's a 4 hour 21. You know that that's going to be a scalp profit zone, and that there's going to be a pullback and an opportunity for a 5-minute entry. Right? So look at this. Now look at the 4 hour. Ready? Boom. Okay, but that's, I showed you that in my PowerPoint slide, right? That's why we have a 21 EMA there. So you should know that on the scalp. Right? So a scalper buys at support and exits at resistance, and then potentially sells at resistance and exits at support. Right? So, yeah, so that's what they did. Now what about the 5-minute boys or gals? They didn't get an opportunity to buy yet, so it's going to be their turn, potentially. So they're looking at the market like this. Okay? They're looking at a 382 to 618 Fibonacci retracement, and they probably longed it about 22 seconds ago. Right? So look at how far away is the bottom here? About 25 pips. Can you afford to take the shot? What if it came down to the 786? Okay. What are you going to do? You need to answer that question now. What are you going to do? What do you want to do? What's your plan, dude? Okay, you can identify support and resistance multiple ways. I don't really care. Daily and weekly pivots are one way. You could do it like this, for example. Okay, that could be your buy zone anywhere in there. Let me change the template here. Okay. But, you know, somewhere in there, if you're going to do it, you need to do it. But the question is, are you going to do it? Anybody think I should take the shot? Pan took it. Good job, Pan. It's going down. Okay. Well, let's take a look at why then. Okay, they changed this. I gotta double check that I'm reading this. So September 21st. Okay, all right, I think I read this. So yesterday they thought there was a 9% chance the Fed was going to raise interest rates, and now there's an 18% chance. So money has flown into buying the US dollar. Because these probabilities are not created on opinions. These probabilities are created from the delta on various short-term instruments. So you take a look at the difference between the SEP, the November, the DEES, the Feb, the MAR, and the May, for example, and you take a look at the differences in pricing, and the reason the prices are different is it has to do with the anticipated yield. And if you think the Fed's going to raise interest rates here, then a bond today will have to be priced reflecting that. And then if you think they'll raise again in June next year, then anything above that's going to have to reflect that assumption, and it's all done through price. And it's not necessarily like they sit in the debate. It's more like an auction, and you'll pay more or less based on what you think the future is going to hold. So according to this, money just started flowing into the US dollar. Which pair is this? This is the Fed Funds Futures Market. Okay? It's the cost of money between banks to banks. Okay? So this is professionals lending professionals money. Okay? And it tends to be smart. Someone said earlier here, somebody said, oh, you know, it was yesterday. Somebody said, you know, the bond market is usually right and the stock market usually ain't. Well, that's the opinions being reflected right there. Somebody asked about the Aussie dollar. Let me see. I had a bunch of trades on. I don't know if I still am, so let me double check that. Well, I have 2 good and 2 bad. All right, so let's take a look on this chart. All right. So we talked earlier about the potential here for a reversal at a double top, right? You guys remember talking about it before non-farm payrolls? There's the top. I was looking at it on a higher time frame, though, I think. Let's do this one. Okay. And so if the NFP number was good, the US dollar should get strong, and therefore this would probably fall. Apparently it fell a little bit, just a little bit. And hopefully it continues back down there and goes even lower. Ooh. There's a daily central down there. If you're a bull on Aussie dollar, this is actually where it bounced. If you're looking at it from a larger technical point of view, not fundamental, of course, because you don't care about non-farm payrolls. But that would be your first entry, and this is your second entry. But obviously with the daily central in there, that's going to be interesting. The point I'm trying to make is if you're a bull, yesterday, or let's say this morning, you said to yourself, if this is dropping down to 76 area, I'm going to buy it. Okay, and look what happened after non-farm payrolls. It dropped like a ton of bricks, hit that, and spiked up. Why? There were orders sitting there for bulls of the Aussie versus US dollar based on what happened, let's say, in the Asian session or in yesterday's afternoon. So if you were trading this area here this morning or last night for some, you said, well, you know, if this comes down, I'm going to long it. This would have been your buy zone going into the pre-London. So if, let's say I was going to trade Asia and then go to bed, and we were in here, I would just assume it's going to come down, hit the 382 Fibonacci retracement of yesterday's trading range, hit the daily central pivot point, and then launch north to the daily R2. Okay? And it kind of happened. It didn't quite happen. And now we got non-farm payrolls, right? But daily R2 is way up there. So 76.80, let's call 76.75. So you would have bought it at 76.20. So it's only a 40 or 50 pips. It's like not a big deal. Okay, so for those that bought the 101 for the the USD yen, you're now up 50 pips. This pan is on fire. Yeah, pan got it. Okay, let's go back to the pig dog because we set that up. Did the pig dog give you a retracement based on the PowerPoint presentation I gave you? Yes or no? KC got it. So, come on, guys. I did this 1 minute after non-farm payrolls based on the methodology that I showed you before non-farm payrolls. This was the 382 to 618 Fibonacci retracement. Then this came down. Then I said, you know, the 5 minute guys are going to get their chance. And it's going to retrace. And where did it go? It retraced right back to the gray zone, which was, based on the PowerPoint presentation I gave you, your opportunity to sell. Right? Albert's traded twice, profit twice. Yeah. What do you think, guys? Give me some feedback. There are a lot of people that have never done this before. And this is my 123rd non-farm payrolls, which means I've been doing Forex since I was 4 years old. Okay, any questions? We need to move into the next stage of our presentation, and that's to get ready for the stock market open. I have a busy day today too. Oh my gosh. I have to submit a paper. And it's worth 40% of my grade. And here's the problem. I think it's beautifully written, but it's flawed. And I know it. No, but I'm so far down the rabbit hole. It's like a perfectly made technical plan that's fundamentally flawed. How do I get out of this, guys? Oh, yeah, boy. Whoop, whoop. Daily S1. Okay, 50%, by the way, if you're a pure technician, this predicts this. So based on just Fibonacci alone, on this time frame alone, looking at nothing else, I would not expect anything more on this move. Okay. The more interesting area is actually down at near the 618, however. Okay? And it's this 130.14 is actually much more interesting. So maybe we get, let me complicate things because it's always more complicated than you think it's going to be. Okay, and we do that. So we'll see. Or maybe it just dips a little farther and then goes up. You know, let's just go through. Let's tickle the 130 and then deal with it later, I think is what's going to happen. So yeah, so I have to turn in a fundamentally flawed paper that I hope is beautifully written. But doesn't feel good, I'll tell you that much. When you're an overachiever, kills me, man. So we're Non Farm 9:02 now. And you know, what do you want to do with this? Do you want to front run the equity open? But this isn't a good area to do it. It might be a little early on that. I guess we should do commodities and stuff. Good is good enough. You know, perfect is the enemy of good and good. Yeah. Yeah, I know, and that's one of my problems. I know I've overdone it. I know I've taken on more than I should have. I know I probably have gone outside the scope. And my wife was saying, well, you just have to be happy with good enough. I'm like, I'm not writing for good enough. I'm not writing to get an A in the class. I'm writing so, you know, to win an award for like awe-inspiring writing. And she's like, yeah, but it's just a college paper. You just bang them out. Nobody cares. But I care, gold nugget. So, yeah, a little bit of a psychopath, I guess, right? All right, so let's go through the pivots, I guess. Oh, wait, let me look around here. Do you want to do a walk around? Let's do a walk around. All right. Hopefully you can see this. You know what? I'll put lights on. How about that? I'm just wearing shorts and a t-shirt because I got to get on a plane later today, so I haven't put a. I just want to be casual. All right, up here. I guess you can't quite see me. Can you see my hand? All right, right here. All the screen is dedicated to the Euro USD. So I'm just a little off camera here, but what I'm looking at is monthly pivot points and weekly pivot points. And I have a monthly M2 around 110.60. And it's probably not even that big of a deal. So the next one is, oh wait, is that the right number? 110.60? Yeah, I guess so. The next one is really 110.13. Okay. And then, okay, yeah. So now I'm over here. This screen is dedicated to the USD yen. Okay. And I'm looking at that. And our bottom, which I already told clients yesterday, that bottom is a monthly M2. 101.16 is M2. The next one below that is the monthly support, and that's at 99. But nobody wants to head back down to 99. In fact, I bought it at 99 right after Brexit, and I can show it to you. I actually bought it at like 99.01. Long, of course, right? And then, so anyways, so this bounce is an M2 bounce on USD yen. So if you're still over there, if you bought it at M2, that's a hold. Like, you might want to hold it for a year. But I told you that yesterday if you were a client. So you might as well become a client of tradersway.com. What do you think? Going to USD Kitty CAD. CAD's in a world of hurt. CAD is in a world of hurt. Crushed. But crushed off of a triple bottom on the 4-hour with a Stokes, right, with a Stokes kicker. So not terribly unexpected either. And you could, I suppose, so anyways, I'm looking at, let's see, you see my hand here? I'm looking at this chart here. This is all CAD versus US dollar. And one of the things I'm looking at, and I have to get up because it's so far away from my chair. Like, my chair is way over here, and like I'm looking at the far corner that's not even on camera. And I have a monthly central pivot at 30.48, I think it is. And it went down just a little bit lower, but and at 30.30, at 130.30, there's a weekly pivot. So there's a weekly pivot cluster right around the psych level. So if you wanted to buy USD Kitty CAD yesterday at $1.30, it was interesting. So whether you did it or not, I don't know. Right? Aussie dollar kicking off the top, but we're already short, right? Right, let's go back to that. Oh, by the way, we're coming up to that pivot. Oh, look at that. Oh, yeah, we're going to hit it. Boom. Oh, I love being right, don't you? Don't you just love being right? Boop, 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 boop. Come on, a little lower though. We got support here on the, there's a 4-hour 21 acting as support, just in case you wanted to know. But daily and 4-hour Stokes are elevated and they want to crash. So if I can get this right, I'll probably stay short. How do you want to play this? You want to play it like a monthly M3? I don't have monthlies on this chart. Monthly M3 is just around this 76.50 area. Right? Let me double check this. 76.31. 76.31. 76.31. I guess it's kind of where we are now. Yeah, I know I'm not showing my chart. Oh, but I keep saying here. Oh, I'm sorry. Yeah. All right, so anyways, you can see I'm looking forward, right? I'm just trying to explain the setup. So I'm looking forward, and what am I paying attention to is the message I'm getting across, or trying to get across. I'm looking at multiple time frames. I'm looking at weekly and monthly pivots. I'm looking at psych levels. Okay? And all of that's important before I even drop into what I'm going to do today. Right? So now I'm looking way up here. Wait, not this one. The next one. You know what this is way up here? Beast. Okay? So way up there is the beast. That's pound yen, euro yen, Kiwi yen, Aussie yen, Aussie dollar, S&P 500. Whoa, snap. What? That is S&P 500? Oh, yeah. No, why, my face isn't important. I don't care. I mean, look, I'm beautiful, right? But what's important is, you know, how I do my job. Okay? That's what's more important, so that's why I do it that way. All right. Cool, right? And then this is news. This is news. So let me put it back. Cool, right? Oh, Ed's asked, how many instances of MT4 do I run? All right, I'll answer that question. 1 there. Where's my mouse? 2 there. And then this one. Right, so you have to look at the webcam. Okay. 1 in the middle. 1 on the right across 6 screens. 1 on the left across 6 screens. Okay? And then, of course, top left is CNBC, and top right is Bloomberg. What do you guys think? Yeah, so USD CAD, well, the issue with USD CAD is, you know, there was an obvious setup earlier or yesterday. So if you didn't do it now or then, I don't know why you would consider it now. You know what I mean? But all right, but all right, let's break it apart. I don't have any trades on there anymore, so. Well, thank you, Daniel. Daniel, you know, I've known for a million years, so he knows. Okay. Can you figure out what my trade plan was? There are two places in which I suggested considering buying, right? Here and here. Do you see that? What I looked at was the low, the high, and then I took this across here and said that might be a buy zone. And then I took this across here, said that might be a buy zone, and then realized they were also 382 and 618 Fibonacci retracements. But I did it at the beginning of last week. And the trade plan was one of these is probably going to create a bullish bounce to the upside. Okay? Now let's zoom in. Monday opened right on my line. Tuesday bottomed right on my line. Wednesday bottomed right on my line. Right? So there are three opportunities on this chart in which you could buy, based on the analysis that we did a week ahead of time. Okay? So that's that. So that's long gone. If you were not interested in the 618 Fibonacci retracement, or you were not interested in a triple bottom, or you didn't want to buy it at the psychological level of 130, then there was just no plan. Because all of those things would have been like easy street obvious, right? If there was a plan, you're like, oh my God, it just hit 130 for the third time and bounced for the third time, right? So you're either going to play it as a range or you're not. Okay, so now the next step is what will happen next? What are you going to do tomorrow, let's say? Okay. And I think what will probably happen is you might have an opportunity to have it go up to, let's say, 132. So 200 pips off the bottom. And then come back and either kick off of this or come back a little further and kick off of this. And that will be my trade plan for early next week. Oh, well, you should have audio. Can we confirm the audio? Oh, okay, good. Thank you, Daniel. All right, can you see how it's so much easier if you have a trade plan? Look at the target, guys. The target was to buy it at 130 with a target of 133 to 133 and a half. It's called a trade plan. I have a question on the YouTube. Use Thomas Reuters. You mean Thomson Reuters? Why do I need to use them? Okay, we're about 10 minutes from the stock market open. What do you think is going to happen? And by the way, there's only an hour left in this webinar. So you need to start, like, you know, writing things down and say, what can I ask this guy? Okay, S&P 500. Well, there's an interesting series of questions to ask, right? One is that the economy is doing so well that the Fed might have to raise interest rates. So the economy is doing well, and that's good for the stock market, right? The second school of thought is money's going to get more expensive, and that's going to cut into profitability. So you're going to have to pick a team. I, however, have already identified support and resistance for you. Again, something we did last week. Okay. Now, check this out. Do you think it's a coincidence that the bottom of this week is the extreme bearish target for this week? Now, the interesting thing is, working with Traders Way clients, we talked about buying this. I believe it was on a Tuesday, right? It was on Tuesday. Buy this, and I said, based on pivot point theory, not always, but very often, if you hit your extreme bearish target early in the week, like a Tuesday, then by the end of the week, you'll at least touch the weekly central. Are there any Traders Way clients that can confirm that that's what we talked about on Tuesday based on that analysis right in here? No one was around. Daniel says yes. Cool, thank you, Daniel. Nobody else? And so here's the central pivot point. So we were talking on Tuesday about the stock market. One of the things I talked about was that, in particular with the stock market, more people make money on the way up than down, and that this creates a prevailing trade wind that pushes you north. Peter also confirms. Thank you, Peter. And so here's the minimum target from the Tuesday entry here. Not too bad. But, you know, again, it's not my opinion. It's technical analysis. It's that's pivot points. Right? So, again, it's not my opinion whether the stock market should go up or down. Right? For that, I would use things like, you know, I don't know, earnings per share and profitability and fundamental analysis of, let's say, potential new products that, you know, all that kind of stuff, or the quality of management team, all that kind of stuff. But, you know, this going up has to do with pivot points and nothing more than that. So it's not even my opinion. If you just know how to trade, then that's a straightforward scenario. And of course, if you don't know that, then you need to know. Now you know you need to know this stuff, right? That's a good thing. That's a good thing to know that you need to know. Not knowing about what you need to know is a much more difficult place to be in. Okay, so we have someone that says they don't like the stock market. But you like being a currency trader, right? What about the bond market? Do you like to be a bond trader? What about gold and oil? Now the funny thing is, guys, as a currency trader, the stock market, the bond market, gold and oil, lead and copper. All these things, to some degree, one way or another, is important to know. You need to know this stuff because it's the reason money crosses a border. And if money crosses a border, valuations change. So you don't like the stock market? Great. Now you have to master it. I don't care if you like it. I didn't say you have to master Apple shares. But you need to know the consequence of the S&P 500 or the DAX or the FTSE or the Nikkei going up or down. So I am a currency trader. And, you know, I look at things like this. S&P 500 on 2 time frames. Gold, oil, FTSE, DAX, Euro, Nikkei. Oh, did I say S&P 500 twice? Sorry. This is Dow, the Dow Jones. This is the S&P 500. Gold, oil, FTSE, DAX, Euro 50, Nikkei. Okay. What do you see here? Well, the Dow straight up, S&P 500 straight up, FTSE straight up, DAX straight up, Euro straight up, Nikkei straight up. What do you think? Now, first of all, what's the correlation between the global stock market and the value of gold? Alexander says, Wayne, what do you think about oil? Will it reach 45? I think you should have bought it at 40, or you should have sold it at 50. 45 is meaningless to me. You either bought it at 40 or sold it at 50. Anything in the middle, I don't know. I don't know what you're doing. Yeah, the relationship here is inverse, isn't it? Okay. So let's change this up a little bit. Let's do the time warp again. Oh, I want it here. Okay. Gold down. USD yen up. Do they look similar? See? Typically with this situation, though, I'm looking at this. Nikkei USD yen. So are you telling me you trade the Asian session but you don't watch the Japanese stock market? There's seriously something wrong with you, right? You trade Asia and you're not at your charts during the Shanghai Open at 9:30 New York time? What's wrong with you, boy? These things matter. And and then of course the funny thing is, well, Wayne, I'm just a Forex trader. Uh-huh. Wayne, I'm just a Forex trader. Uh-huh. Everyone. I don't know everybody, Fred. I'm self-taught, and I don't listen to anybody else. So I don't know everybody, so I don't know why they would say that. So you're saying filter out of trades before you get in. Well, what if I have trades based on stuff 3 or 4 months ago? So for example, I might go into the September non-farm payrolls with 25 trades open, or none. I don't know what's going to happen in the next month. And by October, I would like to have 50 trades. And in the past, when things were more fluid, let's say, there have been times where I've gone into non-farm payrolls with over 100 open trades. Some of them obviously were long-term trades. So why would one non-farm payrolls, significantly impact, because I'm trend trading in that sense? It would be devastating to a swing trader, impossible to think about as a scalper, right? But for a position trader that had a balanced portfolio, it shouldn't have mattered at all. And then, of course, if the news comes out and it's so horrific it will change central banking policy, then I'll have to reconsider, right? But what would you think of, like, what possibly could happen at a non-farm payrolls that would force the Fed to immediately change their policy? Have you ever seen, so I've done 123 non-farm payrolls in a row now at FX Street. Has there ever been a non-farm payrolls where suddenly, Janet Yellen suddenly takes a microphone somewhere, does a press conference and says, based on non-farm payrolls, we need to change everything? Totally didn't see this coming. We got to throw everything out and change everything now. We got to get drastic and serious because of that non-farm payrolls. We were going to cut interest rates, but now we got to jack them up. Or we were going to jack up interest rates, but now we got to slash. Oh my God, we were completely wrong. We're completely looking the wrong way. No, probably not, right? I haven't seen one that bad. And I've been through some bad non-farm payrolls, let me tell you. So it's so if you're building a portfolio based on a trend in perceived central banking policy, and you plan on being in these trades somewhere between 3 months and 3 years, what's going to happen that's going to change things? What is more important to me is the long-term trend, and then to overlap something, I would overlap seasonality. So I can tell you what I'm going to do in January. I already know what I'm going to do in January. Isn't that nice? It's helpful, at least, at the very least, to know that I have a trade plan, right? So the S&P opening, fine, right? Let's do a quick scan here. Let me sit forward. Oh, got my glasses on. S&P 500 up almost 0.5%. NASDAQ up 0.44%. 10-year T note 1.50. Oil down 0.5% at 41 and some change, 41.5. VIX dropped almost 7%. Aha! So, was it this week or last week that I taught Traders Way clients about the VIX? I guess it probably was last week. One thing we talked about is the meaning of a low VIX number. And we looked back, I don't know, going back 10 or 15 years worth of VIX data. The interesting thing about it and what it means today. So there's been a 7% drop in traders, professional traders, buying insurance. So not only is the S&P 500 going up today, nobody is buying insurance. They're not hedging. What does that tell you? First of all, is that even relevant? The stock market's skyrocketing and nobody's hedging. Think of it this way. You live in a desert and it's summer. Do you need to buy flood insurance? And that's what they feel like right now. The sun is out, it's hot, it's dry. There's no flood coming. We don't need flood insurance. We're going to buy the S&P 500. This is going up. That's it. There's no ifs, ands, or buts about it. Why would we need to waste the money by hedging? Now, this can become a bad thing, but because it's happening right now in real time, it makes it kind of interesting, doesn't it? All right, pivot cluster, pivot cluster, pivot cluster. Doot, doot, pivot cluster. Doot. I'm going to drop into the 1 minute, watch the S&P 500. You think we're going to see some red here? I seen fire and I seen Wayne. Take care, Adam. Well, you got to send me an update, man. This chat doesn't update very well. I have to keep scrolling manually. Vix, you taught about last week. Okay. So, how are we doing with this webinar? Lots of new people. Are you guys finding it informative? Has anyone learned anything new today? Has anyone just been sort of excited and enjoyed the camaraderie of trading an event with a group of people? Okay, great. Great question. Oh, and from Fuji on YouTube, huh? Okay. No. Yeah. Okay. Oh, okay. Yeah. By the way, swing on by the chat, guys, for the YouTubers. All right, this is a good question. It really has to do with market sentiment, right? And this will affect correlations because these things like the direction of stock markets, it has to do with money flow and whether, and it depends on who's doing what. And the reason this is important is because correlations can and will change. So I have a presentation, for example, that I did back in like 2006, and it had to do with, I think it was called, it had to do with chaos theory. And it talks about, if gold goes up, what to buy or sell currency-wise. If stock market goes up, what to do currency-wise. If oil goes up, what to do currency-wise. And a lot of those things may be similar, but many of those things could be different now for various reasons. So the most important thing is if I tell you, the Nikkei goes up, the USD yen should go up. That's probably true today, probably true tomorrow, probably true next month. Next year, I don't know. Next next decade. I don't know. So, Costa got 2 profitable trades. I got a new loyal friend, right? So, I must compliment you for not being boring. Hey, Costa, show your loyalty by, open up at least a demo account at Traders Way. TradersWay.com. Will anyone commit to doing that? Shug's up 300. Holy smokes, Shug. Yeah. Well, we work together every day, so that's good. That's probably because you had things set up yesterday. That's probably it. Is anyone willing to commit to opening a demo account today? Come on, what's the big deal? It's a demo account. All right, so moving back, if the stock market is going up, let's say the S&P 500. If the S&P 500 is going up and only Americans are buying it, what happens to the USD yen? TradersWay.com. I am the chief FX market strategist for TradersWay.com. TradersWay.com. He's asking, Costa keeps asking, what website? What's the website? TradersWay.com. All right, I think you got it. Okay. All right, so let me ask you again. All right, the S&P 500 skyrockets today, but it's only Americans buying it. What happens to the USD yen? Okay. USD yen goes up, he says. Yeah. No. No. No, nothing happens. Nothing happens to the USD yen. Americans are buying the S&P 500. The S&P 500 goes up, but no money has crossed a border. So nothing happens to USD yen. Okay. The S&P 500 goes up, but it's Japanese investors buying because they want to get out of their pathetic negative interest rates and buy something that'll at least appreciate. So they buy the S&P 500 because they think they might make somewhere between 5 to 10% per year on the S&P 500 versus being guaranteed to lose money on a JGB. Okay? So what happens then? And Japanese investors decide to buy the S&P 500. What happens to the value of the USD yen? The question about what demo to open. Honestly, an ECN, the way that an ECN market works is they enter your trade directly into the interbanking system, which is great. There's no spread, there's no markup, which is great, but you pay a fixed commission. It's sort of like buying a stock, and your stockbroker charges you a commission. It's kind of like that, right? So your spread's almost zero, but you have to pay a commission. And this, depending on what part of the world you live in, can be taxed in a favorable way or not a favorable way. because it's a hard dollar versus a soft dollar, and you know it will probably be, the treatment will be different depending on where you are. A variable spread means that most of the time you'll have a spread that is less than a fixed spread. But when the market is not functioning smoothly, like around non-farm payrolls or Brexit or something, the spread can go higher, but not crazy high like a standard sort of account somewhere, where, you know, I've seen other brokers where their spreads go to like 30 pips, right? And that's not necessarily only their broker's fault. The interbank system might be that way. Okay? So maybe the interbank system goes, the spread goes high because no one else is trading, but you want to trade, so the spread's high in the interbank market, but then your broker may also be inefficient or adding to that markup and whatever. A variable says, all right, you can have some flexibility here as a trade-off for giving me a better spread most of the time, but when the market is out of whack and the spreads are high, it'll go up a bit, but not crazy. And you're willing to accept that because most of the time you'll get a lower spread than a traditional account. Okay? Then lastly, a fixed spread is it. So they say, look, we'll guarantee you it's always going to be 2.5 pips on the Euro USD. That's that. And we don't care if the spread in the market goes to 30 pips, you're going to pay 2.5. And of course, all that can be hedged out. And all this stuff can be hedged out, and that's why it requires, you know, different fee structures and stuff. Because it's hard to guarantee someone the spread to always be the same when the spread in the real world is variable depending on market conditions. Because you got to remember, it's all based on what Deutsche Bank and JP Morgan and Bank of America want to do. Right? So the market in there, the interbanking system, has variable spreads because it's like an auction. And right after non-farm payrolls, Deutsche Bank may not want to take your trade. Not at 2 pips, but maybe at 20 pips they will. That kind of stuff, right? So that's how the difference is. So you pay a commission and get with an ECN you pay a small commission and you get whatever the interbank system charges. That's it. Whatever the spread is, you're a member of the system just like Deutsche Bank would. Deutsche Bank's got to pay a spread. So whatever that is, that's what you get. And we just pass it straight through. The variable is a hybrid and a fixed is constant. Therefore, maybe you like that scalping. Maybe you like a variable spread when you scalp it. Maybe, you know, and I say maybe you want a fixed spread on scalping, and that may be true if you scalp the news, because that's when spreads could be really, really high. But if you're more like me where, you know, yeah, you scalp the news, but really my form of trading is to sell it off longer term support and resistance, I'll probably, instead of paying 3 pips, I'd rather pay 2 pips on the spread, and therefore I'll probably go with the VAR. Okay? Cool. So, anyways, that's to answer that. So, go to tradersway.com, and when you open up your demo account, they'll ask you, do you want it to be an ECN? Do you want it to be a variable spread? Or do you want it to be a fixed spread? And I hope my explanation was helpful on making that decision. So why don't you open up a live account and just put $1 million in each and then find out which works better for you. And I think what it'll find out is each account is appropriate for different type of trading. $1 million peso? Ay, 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 ay. All right, so going back to the Japanese housewife, she decides to take the family money out of JGBs because they're guaranteed to lose money in nominal terms and in real terms. So she says, I want to buy the S&P 500. Or maybe it's not a Japanese housewife, maybe it's a Japanese bank, whatever. And they decide to move money from Japan. Now, you can't buy the S&P 500 with yen. So you need to convert your local currency to the foreign currency, which is US dollars. By the way, I'll probably have to do this. I'm going to be in Paris tomorrow. So I'm going to buy some euro. And then I'm going to be in Johannesburg the next day, so I got to buy some rand. And then I'm going to be in England, so I'm going to have to buy some pounds. And then I have to convert all that nonsense, all that worthless currency. All of it's worthless, right? Pound, euro, rand. What am I going to do with that garbage? So anyways, then I have to convert it all back to real money, right? The dollar is suddenly real money. Isn't it funny? The dollar. I'm telling you, 6 years ago, people were telling me, oh, you just use it as toilet paper because the dollar is worthless. It's a fiat currency. Did you see the trade balance, the U.S. trade balance? You see the U.S. deficit? It all points to the end of the currency. The U.S. dollar is going to be replaced by the euro and gold and blah, blah, blah. And I couldn't help laugh then, and it's still funny now. But anyways, I digress. The Japanese investor sells their local currency, the Japanese yen, so that they can buy the US dollar. Right? A true arbitrage, right? So going to the counter at the airport, I'll say, yeah, I need like 100 euros. And she says, oh yeah? Well, I want $80 or $90. I'm like, yeah? All right. So she's buying my dollars, and I'm selling her my dollars because I'm buying her euro, and she's selling me the euro, right? And there's a spread, a bid-ask spread, and all that kind of stuff. So it works the same way with professional investors where they need to sell their Japanese yen so that they can buy US dollars. Great. They just don't do it at the airport. They do it through the interbanking system. Great. So now they got their dollars. Now they decide to call up the Chicago Board of Trade and say, we need to buy a bunch of S&P 500 futures. And they're like, boom, and they do it. So what happened in the foreign exchange market? The Japanese institutions sold their JGBs. So JGBs go down. What happens to interest rates on Japanese government bonds? They sell their JGBs, prices fall. What happens to the yield or the interest rate on Japanese government bonds? See, I'm testing you. How much do you know about bonds? Oh my God, because as a foreign exchange trader, I don't know how you could trade without knowing the yield curve and bonds. No, the price. They sell Japanese government bonds. So when you're selling, what happens to the price? If the market is selling Japanese government bonds, the market is falling, so price is falling, and therefore the yield or the interest rate payment on a bond goes up. Now the way I think about it is this way. Your brother-in-law is a loser, right? Yeah, I know. And one day he comes to you and he says, I need to borrow some money. I'm an entrepreneur. Really? Because I thought you were a drunk and an a-hole. But I guess you can be an entrepreneur too, right? All right. And of course your answer is no. I'm not going to lend you money. And he says, well, what if I pay you like an interest rate? Well, how much? 2%. 2%? Are you joking me? I can get a 10-year T-note. I can lend the United States government that can tax people and even has the power to pull money right out of their bank account. And they will pay me 1.5%. Guaranteed. It's considered risk-free. And you want to pay me 2%. Well, you're a deadbeat, drunk, idiot, monkey boy, that, you know, and you're offering to pay a 0.5% over risk-free? No, dude, you're going to have to pay a little more. Because I kind of think that my money would be at risk if I gave it to you. And you say, well, how much should I pay? All right? And that's how the bond market works. The bond market says, all right, so just imagine he goes to the bond market now and says, I need to borrow money. Right? And there's two ways to handle it. One, he says, all right, I want to borrow $1 million. And the market says, all right, you need to pay me 25% interest. Ooh, that's a little high. But someone else says, no. I'll loan it to you for 24. And someone else says, no, I'll loan it to you for 23. Someone else says, I'll loan it to you for 22. And then that's it. No one makes any other offer. 22%. And that's it. The market finds a mechanism through like bidding. Another way of doing it is price falls. Right? And therefore the rate goes up. So for example, the guy says, I need to borrow $1 million. And they're like, okay, fine. We'll lend you $1 million. Well, we'll lend you 900,000. Or even worse, I suppose it'd be the other way around. We will lend you 800,000, and then you will pay us $1 million. And he's like, well, that's not enough. I need $1 million. All right, well, we'll lend you $1 million, but then you'll owe us 1,300,000. And he's like, whoa, dude, that's even worse. Right? So prices go down. Yields go up. There's an inverse relationship here. And it has to do with risk and all that kind of stuff. Perceived risk, interest rate risk, time risk, like durational risk, how long the money, right? Like, for example, you lend the guy a small amount of money and he's going to pay you back on payday. How much interest do you charge him? He's going to pay you back in 2 weeks. It's $500. Well, you know he's not going to leave town. You know he's probably not going to die. You know he's probably not going to get fired from his job because he's been there a couple of years already. He's probably going to get paid. So as long as you can track him down on payday, you'll probably get your money back. What if he wants to borrow $1 million and pay you back 30 years from now? What's the odds that he loses his job in the next 30 years? What are the odds that the business venture of his fails over the course of 30 years? What's the likelihood other interest rates besides the one you're charging him go up or down over the course of 30 years? You see what I mean? And then all of a sudden there's a lot of different risks. And then if this money is in a foreign currency, what is the likelihood, the value of one or both of the currencies change in valuation over the course of 30 years? I mean, all these things are huge risks, right, that have to be priced in. So if people are getting out of JGBs, the price will fall. Therefore, people in Japan that want, like corporations, for example, or the government, right? Those that need to borrow from the bond market are going to have to convince people to invest. So if people are getting out of the bond market, the price is falling, right? Because everyone's selling their bonds. But you're a corporation, and you're like, dude, I need to borrow money. But everybody, all my lenders are disappearing. So what are you going to have to do to attract someone to stay in the market and lend you money? You say, well, what if I pay a little bit higher of an interest rate? You see? And that's how that works. If price is falling, interest rates are going up. Because there's less lenders, so for borrowers are going to have to pay more money in interest rate. Okay? Is that a helpful way to understand the bond market? So the Japanese investors dump their JGBs, their Japanese government bonds. So therefore, we know the bond market's going to go down and interest rates are going to go up. If they decide to then buy the Nikkei, the Japanese stock market, the Nikkei would go up, bonds would fall, interest rates would rise in Japan, but nothing would happen to the Japanese yen because they're in yen and they stayed in yen. So they're not buying or selling yen. They're just selling the bond market and buying the stock market, but all in Japan, so nothing affects the yen. If they decide to sell the JGBs, JGB prices fall, so the bond market falls, interest rates rise, and then they sell their Japanese yen. What happens when you sell Japanese yen? The quantity of yen in the global marketplace goes up. Okay? You know what? Hang on. You are the one, only you beneath the moon and under the sun. All right, quick economics class. Doot, doot. Come on, come on, come on now, touch me, baby. Can't you see that I am not afraid? All right, hang on. I got to change the color here. What? Why can't you tell me? All right. So the quantity of money, and I guess we'll have to do the value of money. I think this will work out. All right, let's see what happens. So the first thing that we need to look at is supply and demand. Demand curve. Okay. Remember, Harvard always asks you to label your chart. Okay. Demand curve. And then let's change colors. Supply. Okay. Label it. Okay. There is a proper supply and demand chart for the value of money. The how about purchasing power of currency? I know. Okay. All right. Okay. Fine. Great. I'm not going to go into foreign exchange and all that because that gets really complicated. All right. Great. So we're talking about Japanese investors selling their Japanese government bonds. So they went to cash. They have cash. Bonds have fallen. So demand for bonds have fallen. Demand for cash has increased. Great. Now they got this cash. So you can have a supply and demand chart based on that stuff. So now they've gone to cash, and they decide they want to convert it to US dollars so that they can invest it in the S&P 500. And then the theory is the S&P 500 will go up. But there will also be an impact on the foreign exchange market and the value of these currencies. So you could do a supply and demand curve like this for the Japanese yen, and you could do another one supply and demand curve for the US dollar, and therefore you can get all this put together, right? Yeah, I know. Albert's like, what a lame school. I know, it's the best I could get into. All right, so great. So we're talking about so this is Japanese purchasing power of the Japanese yen. There's a better chart label. Okay, great. So they have cash and they want to sell it, right? They want to sell it so that they can buy US dollars with it. So let's do that. So when you sell it, it becomes available in the market, right? So the supply curve needs to shift to the right. Okay? I'm not even going to change the demand curve, but demand would fall because like if everyone is selling it, obviously demand for it would be low. So you would even shift this to the right. But let's just do supply side here. Have you ever hear that? By the way, do you ever hear economists saying, oh, well, that's just supply side. You know, we're not even going to talk about demand side economics. Or the other way around. Do you ever hear that? This is it. In this case, I'm like, we're only going to do supply side. Okay, so supply 1 has shifted to supply 2. And this means there is more Japanese yen as you shift to the right. Okay? Also, if you want to look at it this way, let's try to explain it here. If we're looking at the demand curve now, look at this. Okay? When demand is high, the value is high, right? When demand is low, all that kind of stuff. But let's just do this. We have an equilibrium point here, which we will call valuation 1. Now that the Japanese investors have gone to cash and they're going to exchange their cash in the foreign exchange market, there's more Japanese yen in the interbanking system. So the demand curve, the supply curve of yen shifts to the right. And this lowers now if to equilibrium price 2, which shows that the value or the purchasing power of Japanese yen has fallen from equilibrium point 1 to equilibrium point 2. Okay? So an increase in the supply of Japanese yen in the interbanking system lowers its purchasing power, or its valuation, if you will. So with all things being equal here, not even discussing the US dollar, if we're looking at a chart of the USD yen now, okay, because of based on Japanese yen, right, the base. Okay, if we were at 101, and this is price now, the Japanese yen, what would happen to the Japanese yen if supply of yen in the open market increased and its valuation falls? How is that reflected on this USD yen chart, assuming nothing's changed for the dollar? USD yen should go up, so I'm going to do that in a slightly different color. Or how about a much different color? One would suppose this would happen based on this trade outlined in this chart here. Now the money is then going to be converted into dollars, so then the demand for dollars will go up. And the opposite would be true, right? So let's say if we switch this to dollars and demand for dollars increased, you would shift demand to the right. And you'd get an increase from D1. Well, I guess let's do this in black to keep it consistent. You'd shift this from D1 to D2 if it was dollars now, not yen. And the value of the dollar, you know, the equilibrium point, we went from what? I want to make sure I get this right. We went from here. No. Well, this is the equilibrium point. So this is the new equilibrium point here, right? So if we're talking about dollars, so I guess we could do this like, this is Japanese yen 1, and Japanese yen 2. So we could do $1, and the new equilibrium point now is $2, right? And you would see that in that case, when demand increases, the value of the currency goes up from the equilibrium point 1 to equilibrium point 2. So this is your E1, or this is your E2, this is the E1. This is the yen, E2. This is the dollar, E2. Okay? So based on increase of supply in yen, the yen falls in value. Increase in demand in dollar, increase in value. So based on this alone, you would also expect the USD yen to go up. And combined, if they're both happening at the same time or potentially for the same reason, then it goes up even further or faster. That's all I know about that. See? Don't you miss being in college like I am? Don't you want to be a 43-year-old college student? DWX opened a demo. A couple other people in the other chat opened a demo. Right on, guys. I appreciate your loyalty. Saudi Arabia has no taxes? Yeah, not yet. We'll see how long that lasts. Yeah, so that was a quick explanation of supply and demand in the interbanking system based on money shifting borders and how demand for one currency falls, or no, actually I shouldn't say it that way. The supply of one currency increases and the demand for the other currency increases. Right? So you got increase in supply in one, increase in demand in the other, and put together, the value of both currencies change. Right? And we see that in the stock market today. If the investors are not foreigners, then nothing happens to the value of the currency. Now maybe the bond market goes down and the stock market goes up, because they sold their bonds and bought the stock market, which is fairly traditional, nothing would happen to the dollar. So it really depends on whether the money is crossing a border. And that's why I talk about, you know, we started this conversation because somebody said, oh, I don't like stocks, Wayne, when I'm talking about the S&P 500. You don't like stocks? What? You know, what about bonds? Oh, I don't like bonds either. What? What about commodities? Gold and oil and copper and soybeans? No, I don't like any of those, Wayne. Wayne, I'm just a currency trader. And then, of course, that's where you fall down onto the ground laughing. Because you're like, well, gold is money. Oil is money. Why do people buy bonds? Because it's fun? Because it's money. Okay? So, it's all about money. And if you're a money trader like we are, we want to pay attention to the why. Not just to like, oh, look at the euro fall. Okay, whatever, brother. Right? It's more like, why is it falling? And why didn't you short it yesterday or the day before, the day before, or the day before? Like, now you're interested in selling it? Clearly not on the clue train, right? So what is the clue train? Understanding what's happening around the world. Yes, I care about what's happening to the Japanese stock market. Yes, I care about what's happening to the FTSE, or to the Bund, for that matter. Right? Because it sets the stage for the performance of foreign exchange. If investors are moving money to find yield, or they're moving money away from risk, or moving money into an opportunity, or they're moving money simply so that they can buy oil, right? That's priced in dollars. South Africa digs a hole into the ground, pulls out some gold. They don't sell it for rand, they sell it for dollar. So the value of the dollar is going to be important, and money will exchange hands. The yen, the rand can get strong. The rand could get weak, but it's not because of any. I mean, yes, the government matters. Yes, the central banking policy matters, but also global macroeconomics matters, and demand for gold matters. Whether it's gold for anti-inflation, gold for anti-fiat, or gold because you're going to make jewelry or computers with it. These things matter, and in particular if it's foreigners doing business with each other. Money crossing one border and going into another, increasing supply in the foreign exchange market or the interbanking system, and changing demand in the interbanking system for a different currency. And if so, then the values of the currencies change. And so I would, if this was a paper, I would argue that if you're a foreign exchange trader, you should know about bonds and the spread between various the bonds and boons, right? For example, you should know about gold and oil and copper. And like, I got a copper chart right there. You can see it in the little webcam. It's right there. I'm looking at copper. Oh my God. Right? Yeah. Gold matters. Oil matters. Where the S&P 500, which I have over there, where does that go? And if I'm in Asia, guess what? I'm trading Asian currencies. I'm looking at Aussie and Kiwi and Japanese yen. And I'm getting news about Australia and New Zealand and China and Japan and Korea. For example, I'm in my seat when Shanghai opens. But I'm also watching the Japanese stock market. And I look and I say, wow, look, money going into the market there. What's going on? Then I'll glance over my charts over here, which I told you all of these are yens. Guess what? The yen's weak. Oh, snap. Now I know why it's weak. Okay? So fundamental analysis is important. Right when Non Farm Payrolls was released, one of the things we looked at was at VIX. The stock market was up 0.5% in the United States, both the Dow and the S&P 500. And other things had moved 0.5%. But the VIX dropped by 7%. Right? Is that important information, guys? Right as Non Farm Payrolls is released, we're looking at the VIX. The VIX dropped 7%. is that relevant information? Yeah, this stock market's going up. Nobody is buying insurance. Nobody is hedging. Everyone's going along the stock market. Boom. Market's going up. So yeah, so all of this is very, very relevant. So today, we get a good non-farm payrolls. U.S. dollar, U.S. dollar strengthens. So the pre-event, the scalp that I set up based on our methodology before the news came out was that we were going to look for a pullback to this area here, and we're going to sell it. That's what we talked about before the news came out. Then I actually drew the fib after the first 2 or 3 candles. I drew the gray zone right here and said that is where you're going to sell. And this is where it dropped. So based on the methodology, that's the trade. And it dropped from 31.10 to 30.10. So only 100 pips. Well, I'm sorry. I'm busy, you know. I got 600 of my closest friends hanging out. So I was distracted. So you only made 100 pips on that trade. Well, maybe next month will be better. But it's a scalp, so don't make a big deal of it, right? But what is the big deal then? The big deal is that the number came out big. 2 months in a row now of above average, right? Above average. It's not in the average. It's a fat tail if you're looking at a curve, right? If you're drawing a bell curve and you're plotting NFPs, we had 2 months ago, we had a horrible NFP that was here, but most NFPs are like 180, 180, 180, and then there's some big ones here, right? So this goes from 0 NFP to 400 NFP, right? And so we've had a couple of fat tails here. And what this means now, if our NFP is closer to this side of the bell curve here, and that's my bell curve, by the way, if we're on the right side of the bell curve in a fat tail scenario, market participants may interpret this as the Fed raising interest rates sooner than later. Now, the argument is, does that mean September? Or does that mean December? Or if December was off the table, does that mean December is back? Well, that's the big argument, and there's no clear answer. I can't speak for the entire market, right? I'd like to, actually. I'd like to speak the whole market. I think FX Street can. They know all the retail people. They know all the professionals. I think FX Street could speak for the whole market, but I don't have that type of research. Okay? So we can say some people think September's on the table. Some people think December's on the table. Somewhere in between, they're probably right, maybe wrong. And we'll have to discover that more. The next opportunity to discover that is going to be the Jackson Hole meeting. And we'll see what Janet Yellen says then. And then we got the next September non-farm payrolls. And then we got the Fed meeting. So then just to add one more piece of what we discussed today, we looked at the Fed funds futures market, which prices short-term loans between banks to each other. And you look at the differentials of the monthly contracts for these loans. You look at the pricing differential between the the front month and back months and all these things, and based on the pricing, you can extrapolate what the bond market participants believe future interest rates will be, which would be a risk which they would need to be compensated for. Therefore, the prices change, and you look at these differential of prices between these front and back months, and you can extrapolate the likelihood that the Fed raises interest rates. And what we looked at was the September contract. Yesterday, there was a 9% chance the Fed was going to raise interest rates in September. Today, there's 18%. So just because of non-farm payrolls, the last time I looked, the odds have doubled for the Fed to raise interest rates. And I said, well, that's going to increase the value of the US dollar. And sure enough, boom, you made 100 pips. And a few people in the room here made 200 or 300 pips. How many people here made more than 100 pips today on the scalps and the setups? We also talked about USD CAD long. We talked about Aussie dollar short. We talked about Euro USD short. So on and so forth. Oh, the USD long. Remember the Euro USD? Not the Euro USD. USD yen. There was a long there that we talked about in great detail based on a triple bottom on the daily chart at a monthly, weekly pivot cluster. Right? I think that was a great 3 hours. Yeah, Shug made over 300 pips. Good for you, Shug. Yeah, 300. I think it was a good day. I had a really fun time. I am now going to change out of my trading clothes. I'm in shorts and a t-shirt because it gets hot in my office in front of all these screens. I'm going to very quickly review one last time my final examination paper that I have to send to Harvard because today is the last day. Today is finals day for me. And I'll be done my summer school. And then I'm going to pack a suitcase, grab my passport, and I'm going to be off to Paris. I'm going to smoke a fabulous cigar at a very ancient old place. Then I'll jump on another plane, zip over to Johannesburg. And 48 hours from now, I'll have left hot and humid summer Georgia, and I'll be in Johannesburg where it's cold and winter. It's going to be a shock, baby. It's going to be a shock. But I'm going to heavily influence the foreign exchange market. So I will be selling some dollars later today. I will be buying some euros. And then I'll be selling some euros so I can buy some rand. And then I'm going to sell my rand so I can buy some pound because I've been invited over to Buckingham Palace to smoke a cigar with the Queen. And I say, only if you got scotch, baby. She says, oh, I got scotch. And I say, right on, Liz. And then, boom, got to sell all my pounds, and I got to get back to America. And so I'll be buying U.S. dollars again. So it's going to be a good one. So without further ado, thank you, FX Street. Thank you to the moderators, Mauricio, for helping and all that kind of stuff. Really appreciate it. I had a good day. I hope you did too. I hope you learned a few things, and I hope I hope it was fun. I like what I do. I've been doing it a long time. I hope you don't mind that I have fun. It doesn't mean I don't take it serious. Is the Forex Summer School? You'll find that at training.fxbootcamp.com. But I did not add the technical analysis. No, sorry. I got caught up with projects, and then I got caught up with my own school stuff. And then, so today is my last day of summer school, and then I have to start school again in September. And in between now and then, when I get back from, France, South Africa, and England, and then I'm going to be taking my son to MIT to tour the MIT campus in Boston. And then I got to get back and go to Harvard. So it's crazy, man, crazy. No time to breathe. Yeah. So anyways, peace on earth, and I really mean that. We all need to hear it more often. We're so polarized in this world. But, there's happiness in moderation too, So peace on earth. May the pips be with you, and may your profits be above average. Thank you again, FX Street, you're beautiful people. I'll see you guys in the premium session next Friday, so please become a premium member of FX Street. And then if you opened up a live or demo account at tradersway.com, we can work together every day. Every day. Every day. Every day. Every day. Ever. E-day. Cheers. Veritas! Well said, my friend. Huh? Knowledge is the truth. And truth is power. Power is knowledge.